In this situation, there's a large reversal formation. Similar to some previous examples, the definitive break is not exceedingly strong, with some of the first moves closing to a range less than double the ATR value. And as momentum begins to build, using the approximate ATR value of 2, from that time price initially began to close under 135.55. We can multiply that by 3 times for an approximate range of 6, which does a decent job of defining what we can expect to be the initial strongest portion of the movement. And this turns out to be the case even though ATR values and price on the chart undergo some significant changes in a relatively short period of time. That approximate $6 range measured since the break under the 135.55 level has been reached and begins to slow down significantly. And now as short-term sentiment goes from neutral to increasingly bearish, ATR is incidentally close to 2 again. We will define the current support around the round 128 level, and depending on personal preference, some may choose to use less strict criteria and define any movement going $2 under 128 as a definitive break and the start to a bearish continuation. That means 128 minus 2 for any movement under 126. More restrictive criteria could choose the closing price of a candle that has gone under 128. Normally this will be the most recent candle or one of the larger red candles. Then any movement going lower by a range of 2 or more from the point of this current candle's closing price can be considered a definitive break. And here's an ideal situation: a swift drop that closes under both these thresholds. And like last time, we can triple that approximate ATR value of 2 in order to mark a $6 range that estimates where this initially strong short-term movement is likely to slow down and flatten or begin to face some opposition. Then as this does indeed begin to take place, the 128 level can then be used as an upper threshold, which, if not cleared, can make it useful to define another range, approximately 3 ATR values crossing under the 122 level, which is the level that would define a decisive break for another bearish continuation. However, in just a few days, the exact opposite takes place, and during the further development of this new uptrend, we can reuse the 135 level to conveniently define where the newest bullish movement has begun to weaken. With the chart continuing to consolidate back at these previous highs, there's the distinct characteristic of ATR beginning to fall and flatten. Right after another strong portion to a movement, in this case, a brief bullish continuation following clearance over 128, again taking the ATR value at the time of this decisive break, in this case around the low 220s, gave us a decent approximation of where the movement was likely to begin to weaken. After the strongest initial portion moved a range of about 3 times the ATR value.